Hello and welcome to my morning note. Markets are nervous this morning ahead of the European summit, but at least one source of nerves from earlier this year seems to be going away. You may remember back in January and February that many people were very alarmed about the political situation in Iran and about what appeared to be extremely tight constrictions on the supply of oil. That meant that we had oil, particularly the Brent price, anchored above $100 a barrel, and that led to many concerns that oil might be in a bubble or that we were going to suffer some kind of a repeat of the 1970s oil price spikes. Well, in the last few months, crude oil has come down by some 30%, whether you measure that by Brent or West Texas. The WTI price is now actually below $80 a barrel, and the Brent price has been below $90 a barrel. Does that mean that we didn't need to worry about supplies constrictions all along? With me now to discuss this is our commodities editor, Javier Blas. Javier, let's take a quick look at what Brent has done so far. Is this the bursting of a bubble?
No, I don't think so. I think that is supply and demand acting at their best. The market is rebalancing itself. The very high prices at the beginning of the year, when we almost went to $130, has led to some demand destruction, particularly in the United States and Europe, and also triggered a big response by Saudi Arabia, the world's largest oil producer, that is pumping at the highest rate in 30 years. And that is what is now rebalancing the price of oil. But remember, it's very interesting to look at the spot price that is, as you said, at $90, and it seems that it's coming a bit down. But if you look at the 52 moving average, so basically the annual price for oil, it remains very high, and indeed, by historical standards, is the highest ever.
Yeah, it's barely moved downwards at all. Okay, let's take a look at the supply of the inventories of oil that are being held in the States. Now, there are various ways this can be measured, but evidently it's historically very high.
We are seeing here monthly data. If we were looking at weekly data, will be the highest since the 80s. If you look at monthly data, we are the highest since the 30s, so almost 100 years back of a very high stocks. This is the result of the explosion in US oil production, particularly coming from North Dakota, that has now overtake Alaska as the second largest producer in the United States, but also is signaling a big problem in the oil market. Is the oil is trapped in the United States. It cannot leave that country. So we have very depressed prices in the United States, but at the same time, because very high supplies, but at the same time, no so depressed prices elsewhere because supplies are not nearly as loose as this graphic suggests.
Okay, but it's another familiar refrain that things seem to be going better for the States than for the rest of the world
Absolutely.
At the moment.
This is great news for the United States. The United States, I spent a week there very recently, and one theme that you listen from executives now is you are finding the United States energy costs as cheap as in the Middle East. That is extraordinary.
Okay, now on the subject of the Middle East, let's take a look at the critical production coming out of Saudi Arabia, and plainly that remains very high. Is there any risk that what would happen to prices if this reduced?
Well, that's the critical question. I think that Saudi Arabia has the power now to regulate where it wants prices to settle. We know that Saudi Arabia prefer oil prices around $100 a barrel. I believe from my conversation with Saudi officials that, taking into account the state of the global economy, they are willing to let prices to stay lower than that $100 a barrel, potentially even lower than $90 a barrel. But this is a critical factor. This is Saudi Arabia pumping more oil than any moment in 30 years, and that's what is bringing the price down.
So if you saw some speculative activity push the price of those two critical contracts down by another $10 a barrel, might you see a response from Saudi?
We very well could see a response by Saudi Arabia, because I don't think that the Saudis will let the price go, let's say, below $80 a barrel. But at the moment, at $90 a barrel, I see Saudi Arabia very comfortable. They are doing the part. They are bringing prices down. They think that this is a stimulus to the global economy, and also it's a pain for Iran that just happen to be the enemy of Saudi Arabia.
Okay, thank you very much indeed, Javier. For a change, perhaps we actually have some good news. Markets seem to be working the way they're supposed to. I suppose the bad news is that part of the reason oil is going down is that the economy is in bad shape, but at least a reduction in the oil price might help economies rebalance.